Welcome to March-April 2023 edition of CSEE News. We report on economic, construction and real estate trends in all major Central and Southeast European countries, among which Czechia, Slovakia, Bulgaria, Romania, Poland, Hungary, Croatia, Serbia, and Hungary. Today, you are with our edition on the Czechia, and we start asset class by asset class, and we start with the residential. The news on residential are as follows. The Czech government wants to involve the Czech National Development Bank in the construction of affordable rental housing. The cabinet is also planning to amend the law on the State Fund for Investment Support, which supports housing development in the Czech Republic. This is to support the government's commitment that up to 10,000 extra additional rental flats should be built per year by the end of the parliamentary term. The Czech press agency quotes the updated program statement of this cabinet. The government of Prime Minister Petr Fiala promised to support the development of all types of housing, owner-occupied, rental and cooperative. Therefore, it wants to prepare new financial instruments for the construction of affordable rental housing in the form of, for example, fund financing or loans from the European Investment Bank and state guarantees for loans. The new National Development Bank is to be involved in this activity, writes the Czech press agency. The NRB was established in 1992 as the Czech Moravian Guarantee and Development Bank and has been operating under a new name since September 2021. Its sole shareholder is the Czech Republic. The bank offers loans to businesses at zero or preferential interest rates. High inflation brings something that has not been seen in Czechia for quite a long time, a halt in the growth of residential property prices, especially flats. Prices of older flats are even falling. Frozen demand will soon hit construction companies. The housing market has slowed down considerably and players are waiting for further economic development. As in the whole Central and Eastern European region, home ownership is very widespread in Czechia. According to the latest Eurostat data, over 78% of the population own their homes. Demand for owner-occupied housing has been high for a long time, and the housing market has benefited from this for many years. Thanks to high demand and its significant excess oversupply, the residential sector has been the long-term engine of Czech construction. In this situation, property prices have risen sharply. According to the Czech Statistical Office, property prices increased by around 130% between 2015 and 2022. One of the fastest price growth rates in the European Union made residential property in Czechia a lucrative market for investors, and in Prague, where the growth rate was the highest, the residential market resembled a kind of a risk-free stock market rather than a housing market. Consumer price growth accelerated in the second half of 2021 when it finally left the tolerance range of the Czech National Bank and reached an average of 5.1%. One of the hardest hit sectors was construction, which has been plagued by a shortage of materials since the pandemic. The war in Ukraine has pushed inflation into double digits. The average inflation rate for the year reached 15.1%, clearly the highest level since 1993, when independent Czechia was founded and its economy was in the process of being transformed into a market economy. Czechia was among the 5 European Union countries with the highest inflation rates for 2022 onwards. Together with Hungary and the Baltic countries. Double-digit inflation is expected to continue in the coming months. The CNB responded by sharply raising the 2-week base rate. It rose from 0.25% in mid-2021 to 7% in about a year. This made loans, including mortgages, more expensive. The current mortgage rate is around 6%. In a relatively short space of time, the housing market has found itself in a situation where high house prices have been accompanied by high mortgage rates, leading to a cooling in demand for owner-occupied housing. The volume of newly granted mortgages fell by 60% last year. Interest in new apartments in Prague also fell by roughly the same proportion. Nationally, interest fell by a third. It is not worthwhile for developers to build new apartments now. Entry costs have risen sharply. The prices of construction work, building materials and energy are so high, but it's difficult to find buyers for new flats. As a result, prices for new homes are stagnating, while prices for older homes have actually started to fall for the first time in almost a decade. In some regions, house prices are falling by more than 10% compared with the previous quarter. Growth in prices for single-family homes has slowed. Both prices and demand for second homes are falling. The situation is similar in a number of European Union countries, and in some, such as Sweden and Germany, house prices have already fallen significantly. Current housing construction is continuing due to inertia, but the trend in residential building permits is already showing a slowdown. Developers put construction work on hold in major cities so as not to add to the housing stock while they wait for the situation to improve. High mortgage rates reinforce the trend towards rental housing, which started earlier in large cities due to high housing prices. This is also the reason why more and more property developers are focusing on rental housing projects, which they see as the future. The CNB is currently in the spotlight among property developers, those interested in housing and homeowners paying off their mortgages. It continues to hold the 2-week base rate at 7%, preventing banks from lowering mortgage prices. Forecasts suggest that the CNB may cut rates at the end of this year. However, it is far from the level that it would shake up the mortgage market. A rate of 3% could be reached by the end of next year, according to forecasts. Such a reduction should get the housing market moving again. At the same time, rental prices in the most desirable locations are rising at a similar pace to property prices. And now we move on to the news in the office asset class in Czechia. Despite significantly lower prices than in the capital markets, for offices in Brno and Ostrava are struggling with rising vacancies. Other regional markets, however, now offer opportunities for developers, investors or serviced office providers, thanks to the potential of the hub-and-spoke concept. The latter centers around a strategy where companies reduce the size of the main office and then supplement it with smaller spaces in different locations. Alongside that, there is the flex and core office space usage concept, which combines a smaller main office with a membership of one or more co-working centers. These options to curb office vacancies are mentioned in a recent survey by Colliers. The highest achievable rent in Prague in Q4 2022 was approximately €27 per square meter per month. In Brno, it was a full €10 less, that is €16.50, and in Ostrava only €14.50. Despite significantly lower prices, both these regional markets are struggling with rising office vacancies. In modern office space market in regional cities is in the order of 30 to 100,000 meters per city, with Olomouc Hradec, Kralove, and Pilsen leading in terms of volume. In all these cities, thanks to the growth of the hub and spoke concept and co-working, new opportunities are emerging for developers, investors, and established service office providers. A growing number of companies are looking for space in various regions to accommodate the needs of employees who are not interested in moving to big cities but who do not wish to use home office setups. A 44% higher demand for offices in Prague was recorded year on year in Q4 2022. Renegotiations accounted for 58%. The remaining transactions included new leases, expansions, and subleases. By 2025, an additional 400,000 square meters of new office space currently in different stages of preparation is due to be completed in Prague, says GLL. During the entire year 2022, over 547,000 square meters of office space was leased, which was the largest volume of leased office space since the beginning of modern office market monitoring in Prague. Renegotiations of existing lease agreements accounted for the majority of the leasing demand, as evidenced by statistics, where 4 of the 5 largest transactions in 2022 were negotiations. According to recent data, during the second half of the year, no new office buildings commenced construction. This trend is expected to continue as developers are opting to delay construction or postpone projects indefinitely. During Q4 2022, only one office building, Smichów Sita na Knižeci in Prague 5, was completed, consisting of 8,300 square meters of office space. For the entire year 2022, only 75,400 square meters of office space was completed. This is the third lowest result in the last 10 years. The vacancy rate dropped slightly to 7.7%, which is still assessed as a low vacancy rate. Whilst historically B-class buildings showed high vacancy rates, the situation has reversed in the past year, and it is A-class buildings that are registering high vacancy rates. The reason is the additional new completed office space, which was not fully occupied at the time of completion and is still waiting its committed future tenants. Now we go on to the industrial asset class in Czechia and the latest news. As of Q4 2022, in the Czech industrial market, the extremely low vacancy of around 1% persists. The share of speculative construction has grown to 40%, and the modern developer-led warehouse stock reached almost 10.8 million square meters. So experts expect that it will surpass 11 million square meters by the end of Q1 2023, the Industrial Research Forum announced in their report. More than 1,100,000 square meters of new industrial space was delivered in 2022, which represents an increase of 121% compared to 2021. And it is the highest amount of space ever to be delivered to the market within a single year. A total of 148,300 square meters of warehouse space was completed during Q4 2022. This increased the total volume of modern industrial stock to 10.77 million square meters. The vast majority of the new buildings delivered in Q4 had already secured a tenant. Speculatively completed space accounted for only 1% of the new supply. The majority of new space was added in the South Moravian region, 28%, followed by the Moravian Silesian region, 26%, and the Central Bohemian region, 20%. For the full 2022, approximately 1.09 million square meters of industrial space was completed, which is 170% stronger compared to 2021 results. It is also the highest annual new supply result ever recorded on the Czech industrial real estate market. The most significant completion in Q4 2022 was in VGP Park Olomouc, over 39,000 square meters, which was at the time of completion fully leased to a logistics company. The second largest completion was in G2 Logistics, 22,000 square meters, which was fully leased to a company from the automotive sector. The largest completion in 2022 was the completion of Amazon's new 187,000 square meters distribution center in the Olomouc region near Coyetin. In Q4, the most active region in terms of construction activity was the Karlovy Vary region. More than 1/4 of the entire space under construction is located within this region. However, this was dominated by a small number of large big box solutions. Karlovy Vary region was followed by the Pilsen 15% and South Moravin 11% region. The vacancy rate of modern industrial properties remained extremely low at 1% at the end of Q4 2022. In Prague and its surroundings, the vacancy rate remains stable at just 0.76%. However, this vacancy rate also includes office components with industrial buildings, and calculated from the warehouse area only, it would be close to zero. Robert Sgariboldi, director in the industrial leasing department at GLL, says the long-term low vacancy rate is not good for the market. Tenants are losing flexibility and opportunities to grow their businesses efficiently. Rental prices are rising, and there is a surplus of demand for vacant units. The market optimum is in the range of 4-5%, and the question is when the Czech market will be able to reach this level again. A more significant decline in rental prices can then be expected only with vacancy rates at around 6-8%. These were our March-April news for Czechia. You can check our news on Bulgaria, Romania, Hungary, Serbia, Slovakia, Croatia, Poland at cproptech.eu or proptechbulgaria.eu, as well as PropTech Bulgaria's channel on YouTube. You will find links in the first comment below. See you soon. Bye.